one.
Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Alice Ankerstar, and today we'll be talking about the game plan for the Fed meeting this week, the jump in interest rates already, and the challenge of President Biden's comments over the defense of Taiwan. Before we begin, as a reminder, this is financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The Federal Reserve will likely raise interest rates by 75 basis points or more on Wednesday. What's the plan for the market for this week?
Well, good morning, everybody, and thank you, Allison. And for those who know the family, we're going to try to get out and see Allison this weekend for family weekend. And due to, the standard challenges with air travel these days, there was a power outage that cost us to miss a delay. Bottom line is we never got out there to see you, so sorry about that. And we'll try to make that up to you in the future. All right. The question is what's going on with the Federal Reserve meeting this week? It starts tomorrow, and that we have the announcement 2 p.m. Eastern on Wednesday as far as raising rates. And like Allison said, expected to be 75 basis points with maybe a potential for 100 basis points. It'll be a full 1% move. We haven't seen that obviously in a while. So we're coming off of back-to-back 75 basis point moves. We thought a few weeks ago that it would drop to 50 basis points. Then we had Powell's warning of more pain ahead. Then we had the, FedEx CEO on Friday freak everybody out. So we don't know, but I would, either 75 basis point or a full 100 basis point move. I don't think many people are going to do too much ahead of this other than maybe repositioning, which is what we're doing. So what's the strategy there? You look at your holdings across the different portfolios and you do some small repositions. So if you have seen in your accounts some, selling one share of this and buying another share of this, what that is that amounts to computer generated trades when I make allocations to different things to slightly increase risk or decrease risk in certain areas. Often it's the shaving of a share or two here or there to be able to adjust that score. So that's what you're seeing going on. That's better. Those are small moves compared to wholesale moves, which we would normally make in a normal market where you'd move out of a position entirely and move into another one. So small repositioning. Sure, you can make jokes about are we moving around the deck chairs on the Titanic. I don't think that's the case. There's a lot of negativity in the market or in the mainstream media right now. But that's how these things are. It's the worst. It's worst. It's at its worst before it gets better, right? The calm or the the storm before the calm, if you will. When everybody thinks the world is ending, that's when the market flips and goes raging back higher, because at that point the professionals have hopped in and done all their buying. So we'll see, but I don't think you're going to see a major move other than a slight downtrend in the market into Wednesday, and then we'll see what happens on Wednesday.
Next, interest rates are rising very quickly. What's the latest on the inverted yield curve and the potential for recession?
Yeah, well, we know that by the widely accepted definition of two negative quarters or 2 quarters of negative GDP growth, that we're already there, right? The government has not officially acknowledged that, and I kind of agree, just because of the full employment. Employment here in Austin dipped below 3% in the latest reading, right? So now I can't parlay that to the rest of the United States, but certainly zero signs of recession here in Austin. I mean, so, just saying. But the inverted yield curve, often that's it's called the number one predictor of recession. And then the joke that follows that is it's predicted 29 of the last 9 recessions, right? I mean, it over predicts the recession. And if you over predict something enough, you eventually are going to be right. But it's predicted, every recession we've ever had. And it's also predicted several that never happened. Right. So you don't want to put a whole lot into it, but certainly you want to see what it's kind of saying. And here's that curve. And I prefer the graph. I couldn't find one this morning because economists prefer this chart. But when you look at you going out on the yield curves, there's 3-month, 1 year on the left-hand side, 2-year, 5-year, 10-year, and 30. Most people compare the 2-year to the 10-year. Right. So the 2-year is at 3.934%. So if you're going to buy something for, in a 2-year time frame, you would get 3.9%. If you would buy something on a 10-year time frame, you would get 3.477%. Now, that's this chart. In reality, CDs are up to 4.15% is what I found Friday. They're probably going to be up to 4.25% this week. We shall see. I bonds are out there paying even double that. So there are, while everything that's exposed to the market is dropping, and even if you go into a CD for 4.15%, it might drop slightly in value. We've seen some of that last week. Temporarily while this situation sorts itself out. But the whole time you're getting a guaranteed coupon. So just like bonds, you're getting a guaranteed coupon, as long as you hold it. However, the face value of the trading and the spot prices and all that does have some negativity for it. So that's what's going on with the yield curve. Again, it's the rates are moving higher. You're seeing 30-year mortgage rates at over 6.5% now. So with the rate move later this week that we know is coming, we should still will likely still continue to see these creep up. Should you wait to buy things like CDs? Well, you can, but you have to bake in the math problem of you're earning zero while you wait, and you're delaying what they earn because you waited for a small, maybe hanging out there for another small increase in interest. Up to you. I tend to put money to work at all times, so want to have that return coming in, and can buy more later if I choose to. So that's what's going on with the yield curve. It is flashing a big red recession signal, but as long as the employment numbers kind of stay where they are, I don't think the government's going to declare that we're actually in a recession.
Last, President Biden last night said that the U.S. would defend against Taiwan against an unprecedented attack from China. He confirmed that U.S. forces would be used. Why is this problematic?
Well, there's lots of things problematic here. Now, with my background, many of you know, 20 years in the military, 2 master's degrees in national defense, so I have an opinion on this, and I would say it's fairly informed, but from having studied this scenario. But there's a problem here, obviously, from a philosophic perspective. We would obviously defend every Western leaning country in the world, right? If we had the means to, we would of course do that. Would we risk going into major theater war with China over the Taiwanese island? In theory, yes, of course. We've been kind of hinting at that for years. President Bush too said the same sort of thing a couple times, and they started walking it back. So I'd imagine we're going to, President Biden says this last night. I think we'll be walking that back all week long, right? The last thing you want to do is poke the Chinese bear in the face, going, yes, we were going to protect this at all costs, because the cost would be extreme, and the cost of life would be, financially is one thing, but the cost in just human life would be extreme if we honestly put U.S. forces, in that area. And it's largely, so here's the interview that, came out last night, and he was pressed, and maybe he was off his talking points. I don't know. So this isn't a left or right political blah, 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 because, President Bush too said the same thing. Yep. In fact, unequivocally, yes, we would. We've had a policy of strategic ambiguity for many years. That's generally helpful in the military world. China saying this is sending the wrong signal. Pressed further that, this is completely playing with fire as far as, kicking off a war. Here's the problem. And if you look at this chart, the chart that I just sent away. So let's get back to that chart. So I can't, for some reason, I can't blow it up here, but off to the right, you see how big China is. Taiwan's like right off the coastline. And then when you think of military force, if we're going to use that, it would involve some bombs, and it would either we would have to bomb China to stop them from attacking Taiwan. But let's be honest. So if you use most people aren't as familiar over there as they are with where Cuba lies in relation to the U.S. So think way back in time. If the U.S., whether back in time or today, decided to take Cuba, I'm not saying we're going to, right? Just decided we were going to make that a 51st state, there is absolutely zero chance anybody in this world could stop us because of logistics, right? It's right there. Cuba is right off our coastline. There is no way anybody could get forces there in time to stop us from taking the whole island and pummeling it, right? So Could we stop China from taking Taiwan? Absolutely not. If they wake up on Wednesday and say today's the day and they go in and take it, we absolutely can do nothing about it. Absolutely nothing, right? I mean, it would be gone before we could even attempt to defend it. That's just like logistics, right? Because it's right there. And unless they tell us they're going to do it, it's like, hey, 3 weeks from now, we're going to go take Taiwan. And we say, okay, thanks for the heads up. We're going to now put, 2, 3 maybe carriers, which would be kind of unprecedented too, because they're doing power projection all over the world. But I mean, our forces going in there is obviously the Navy's the only one that has the ability to get in there at any quickly, if you will. We can fly bombers from other outside agencies or outside geographic areas. We have fighters positioned over here in this area. But to be able to stage an air war is problematic. A Navy war is the lack of just not enough assets. And then where are these ground troops coming from? Well, they would have to be over here, and then we'd have to put them on a boat, or we have to retake the island and retake the airports if we're going to fly the troops in, right? That would be dumb for China to let us do that, but and they know that's not a national secret. I just told you there. But yeah, this is a real problem to be able to do this. So to come on TV and say that we're actually going to put U.S. forces there is a problem. How that would affect the markets would be significantly. You've seen this year that the Russia-Ukraine situation has affected the markets. And we're not even putting ground troops there to defend Ukraine. Okay. So, but we're going to go all the way across on the other side of the world and defend Taiwan with U.S. troops. I mean, the loss of life would be just you wouldn't be able to process it if we were to actually attempt to do it. So I don't think we would, but President says we will, so we probably will. I'm a military man, so off we go, right? But the real problem is, you saw the Ukraine-Russia situation affect the markets decently. China, Taiwan, if that kicked off, I think, immediately you would have to go to complete cash across the board, especially in, retirement accounts where there's not tax consequences. You would then have to look about what are the tax consequences of going to cash in your taxable accounts. And I think, what's one of the times you would have to go to cash? Yeah, war with China would be one of those, right? Because that would likely be years, World War type numbers that we just don't really see much anymore, but that's immediately where we would be right back into if we should do this. So that's why the whole thing's problematic. China's got its own issues with its economy right now. All the China stocks are down, just like the U.S. stocks are down. So everybody's kind of struggling through it while we wait for the inflation thing to kind of play out. But lots of things that are problematic with this, but I think the U.S. government will be kind of walking back his comments through most of the week, and that this thing will become more of a non-event going forward, or at least hopefully.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.